Hello traders, this is Rich from tradesight. I want to take a few minutes here and take a look at the daily charts of the ES futures. The ES futures track the broad market represented by the S&P 500 and also the Spider ETF, which is the stock traded surrogate for the same thing. We have a 13 exhaustion in place generated from our proprietary seeker study, which is indicating that the bull trend is at an exhaustion point and should be monitored very closely for price inflection and a change in trend. So let's take a look at the ES futures first, and also some of the details that go along with that. Here's a look at the ES futures in the daily time frame. What I want to point your attention to first here is approximately in the middle of the chart here. We saw some construction start to develop after this reaction that we had, this downward impulse in June. We had a 1 through 9 setup phase start after the completion of that 9 bars up. In the seeker setup phase, we went on to the countdown phase of the seeker exhaustion study. We got to about bar 12 here, as we often do, but we were quite a bit lower here than the rest of the counted numbers. So what we did was we started printing asterisks above these numbers here that would have qualified for a 13 exhaustion, but they weren't above candle 8 here of the countdown phase. These are the red numbers. So the candle 8 close was up here above, well above 1690, and we didn't get a close back above that until today's settlement. Today's settlement was above that 1690 level, which represents bar 8 of this setup of the countdown phase. So now we're finally producing the 13 exhaustion associated with this countdown phase of this current seeker run. Many folks are familiar with our seeker tool, and while we do have a 1 through 9 setup phase here that did complete, that didn't recycle the 13 because of a particular feature here. This is one of the real important features of our tool here, is that the 1 through 9 setup phase here doesn't necessarily end on bar 9. That's just the minimum requirement to start the countdown phase. It actually continues until we get a price flip in the opposite direction. So what we do usually is we typically do not keep projecting and counting those numbers in the extended portion of the setup phase. We terminate them after candle 9, even though the setup phase continues. We just don't label them on the chart to endeavor to keep the chart as clean as possible. So let me just change the setting here. There's a setting in the tool that you can reveal those numbers and have them keep plotting on the chart. So let me show you that right now. Alright, so here's a look at the chart, and what we've done is we've continued to label the countdown phase just beyond candle 9. As you saw before, the green number stopped plotting after candle number 9 was recorded. But you can see here that we got to 20 bars up using our 4-bar look back methodology. So what happens here is that we have this 1 through 9 minimum setup phase completely contained within the prior setup. So that allows us to ignore this smaller setup because it is contained within the previous setup completely, and now we have our 13 printing here on today's candle. Now to further highlight that, there's another tool that we can use, another feature will be to activate drawing the box around and quantifying the range of the absolute setup phase. So let me take a look and change that for you right now. Alright, so just to continue here, now I've drawn a box around the entire setup phase. This uses the low of candle 1 of the 1 through 9 setup phase all the way up to the high water mark here of the most recent completed setup phase. We got it to bar 20. We completed the setup phase, and now we're getting the 13 because this 1 through 9 setup phase here under my cursor is contained within the previous range. Therefore, it's ignored, and we're getting our 13. Now, keep in mind that the 13 is a little bit more of an aggressive signal. That's because we're choosing to ignore the 1 through 18 rule, which means that if the box for the setup phase continues beyond candle 18, we will not recycle. The more conservative setting would be to recycle the 1 through 13 countdown phase if the impulse is strong enough in the setup phase, that's the green candles, to continue beyond 18 bars. Now if we choose to recycle after 18 bars, I'll change the chart for you now. You're going to see that this is now recycled, and instead of a 13 above today's candle, we now have a 1. So this would be the more conservative setting. Going back again to the more aggressive setting. The more aggressive setting does show that we do have that 13 exhaustion in place. So definitely I think it's worth at this point monitoring this to see if we do get a price flip to the downside. That would be close below 4 bars ago in the setup phase, or if we get a settlement below the 10 EMA for the current trend to flip to short-term negative. If we do, then we're going to be trading on the short side aggressively and looking for short setups and not buying pullbacks. Same thing can be said for the spiders. I'm going to flip the chart here to the spiders, which is the ETF surrogate for the broad market, and you can see that we have the same setup in place here. We have our 1 through 19 setup. We've got our exhaustion warning in place here on today's candle. We've got a range high camouflage sell signal. So everything's lined up here for at least a gap fill on this and a potential change in trend. So we're going to be on top of this and monitoring this to see if we do in fact get a reversal from this exhaustion warning. The exhaustion warning will become an outright sell signal if we get a price flip to the downside, or if we settle and follow through below the 10 EMA. The 10 EMA again is the yellow line. Alright folks, as always, thanks for listening. This has been Rich for tradesight.